All right. Again, happy Saturday. Thank you for joining me today. As more of you probably pop on, but I'm going to get it started because I like to be prompt as we're getting in. So, this masterclass today is Invest Your Way to Freedom, teaching you how to build wealth and flexibility through confident investing strategies. And as you pop in, just introduce yourself just so I can know who you are, who's joining. Tell me where you're tuning in from. I'm from North Carolina. Well, not from North Carolina. I'm from New York, but I'm in North Carolina. That's where I reside right now. And as you're introducing yourself, tell me, what does freedom look like for you? Because I'm sure we all have different definitions of what it means to be free. It could mean flexibility. It could mean financial freedom for you. So let me know some of the ways that freedom looks like for you, and one word that describes how you feel about money. Like, do you feel optimistic about it? Do you feel stressed about it? So let me know as you're coming in, drop it in the comments. I would love to hear. And just letting you know, this training is for you if you want to learn how to create more income without trading your peace for profit. Because I'm pretty sure there's so many ways that people could teach you how to make more money, but those ways could be stressful, right? Like our jobs. We have to trade our time, sometimes trade our peace for that paycheck. You're ready to manage your own investments with confidence and clarity, because you may have investments that you're in now, maybe a 401k or some kind of retirement plan at work, but maybe you don't feel confident about investing on your own. Maybe you're lacking the clarity. So if you're any of those things, this is for you. And if you desire to multiply your money without losing yourself in the process, right? Without burning yourself out, without being incredibly stressed, if any of those things are for you, then this training is for you. And so, if you answered yes to any of those and you're ready to take deliberate action to make your money work for you and not the other way around, right? Since we're always used to working for our money, but this is time for our money to work for us, then you are definitely in the right place. So over the next 60 minutes or so, right? Trying to make it about 60 minutes. I'm going to teach you how to use the 5-step framework that I use in order to confidently invest. I'm going to teach you what are some of the ways that you could enter and exit a trade profitably, right? So you can make money. And I'm going to teach you how to accelerate your account growth for income and not just retirement. Because a lot of people feel like investing is only for the long term. It's only when you retire. It's only once you leave your job. But that's not incorrect, right? But it is incomplete, because you can also profit now and make money from investing, and you don't have to wait until you retire. And so my promise to you is I'm going to show you the 5-step framework for building your knowledge and your confidence investing in the stock market. And I'm going to help you understand the skill of investing, right? Because investing is also a skill and is not just to make money, right? That's obviously part of it, but for you to be able to buy your time back, your peace, your freedom, because now you have an additional stream of income that allow you to do the things that you really desire to do, which is not going to work every day, I'm sure. And if you stay to the end, I have a surprise freebie that I created and is essentially a checklist of everything that you need before you purchase your stock, right? Whether you're first time purchasing or you're getting into managing your account on your own, is pretty much a checklist of all the things that you'll need, how to look for an investment, how to place your orders. So I'm going to gift it to you if you stay to the end, and I'll just drop it in the chat. So just some reminders: grab your pen, your pencil, your notebook. Definitely take some notes throughout the class because I'm going to be dropping a lot of gems. So make sure you're picking it up. Be sure to lock in and limit distractions. I know we kind of started with a few distractions, but try to limit your distractions if you can. I know it's the weekend and sometimes it's busy. And if you have any questions, you could drop them in the chat box anytime. I'm going to be peeking in, looking to see if you have any questions so I can answer those. And so let me know in the chat if this sounds like you. You could just drop in me if this sounds like you heard about other people making money in the stock market and you want to learn how to as well, right? Because what you really want to do is be able to use the stock market to allow you to have freedom. If that sounds like you, drop a me in the chat. Or maybe you're tired of feeling limited by your paycheck or your work schedule, right? You're tired of having to go to work every day, having to ask for the PTO, having to have that same work grind. You're really looking for something more flexible. And you want to make your money work for you so you can live life on your own terms, right? Because sometimes work be getting in the way of living, right? You want to be able to have the flexibility, go to the places you want to go, do the things you want to do, and not really be tied up on work, making sure that you got paid time off for the things that you want to do. And you really want that flexibility. So if that is you, drop a me in the comments. But here is what the real problem is. The real problem is fear for a lot of people. Fear keeps many people from investing. But what's really missing is the clarity, the confidence, and a plan. Because that's where the fear is coming from. Because a lot of people don't know what they're doing. They're scared of losing money. And so that fear is real, right? And it stops a lot of people from really taking the next steps. But the problem isn't really that they don't have enough money or they don't make enough money. They just don't know how to make their money move without them, right? A lot of us, we exchange our time for money. That is the only way that we've learned how to make money. We go to work, we exchange our time, and we get a paycheck. But there's definitely other ways, right? When you're building wealth, when you're building residual income, when you're building passive income, that you don't have to exchange your time for your money. And so I want to be able to introduce you to a new reality, which is actually my reality. So being able to take more vacations and getaways without worrying if this fits into your budget. Sure, we all need a budget, but just to be able to have that income that you don't have to say, is this going to fit into the budget? Am I going to be able to do this week? Am I going to be able to do this month, this year, or whatever it may be? Just having those additional funds to really fund your passion and the life that you want to live. Being able to have additional funds to put money down on something, right? Whether it's a house, whether it's a car, whether it is student loans, credit card loans, or a business venture, right? You want to start a business. Sometimes you just need additional money to be able to put down on those things, which you can also get from investing and being able to afford more luxuries, right? Just the nice to has from the day to days, like a housekeeper, a cook, going to the spa when you want to, if you want to put your kids in private school. Just being able to have all of these luxuries can definitely be the new normal. So if this is some of the luxuries you're like, this is what I want my new reality be like, drop a one in the chat. So imagine knowing that your money is growing quietly in the background while you're living your best life with peace, purpose, and prosperity. That's definitely what I want to show you how to do. And so, just an introduction about me. I am Ta'Donna Nagle. I am the founder and creator of Legendary Wealth Builders, which is a financial education company where I teach high achievers how to build wealth without the burnout by teaching them how to master, manage, and multiply their income. I'm also the host of a new podcast called Align for Wealth. And I also do financial coaching and financial education classes to middle school students and to youth professionals, non for profit agencies. But all this experience that I had in the financial industry, working over 15 years in investment banking, the truth that I discovered is that the greatest form of compensation is not finances. And I know many people may think money is the greatest form of compensation, but what I found is that fulfillment is actually the greatest form of compensation. Even though I didn't always know that, I didn't always believe that, it really took into 2017 for me to realize that money wasn't the greatest form of compensation. In 2017, I was still gainfully employed in corporate America, working in investment banking, but that was the year I had my son, my second child. I was on maternity leave for 12 weeks and had to return back to work. And I was not looking forward to it. Even though I did this before, right? Because this was my second child, already had a daughter. I was like, here we go. I had to return back to work, return back to trying to overperform, trying to overplease, feeling like I was being overworked, but overlooked as well. Feel like I'm dealing with all the microaggressions because not a lot of people looking like me in investment banking. And I went in there really feeling stressed out. I felt like I had to perform back to my past actually my full capacity. I was running in between meetings, pumping because I had a newborn at home. I was running out of work, trying to pick kids up from daycare. I was doing all the things, right? And it really was starting to have a toll on me. But it was difficult at first for me to leave that life because I felt like I did all the things that people expected of me. I checked all the boxes, right? I was working in investment banking, I was working in finance for over 15 years, multiple promotions, checking all the box in terms of great credit, great career, had the husband, the family, all the things. So I'm like, I can't just step away from this. I have the life that everybody say I should have, right? I'm doing all the things that I'm supposed to do. But in 2017, I was just like, this is not it, right? This is not it. And before quiet quitting was a thing, before the great resignation was a thing, I dropped out of corporate America without a plan B, without a backup plan, right? With still little kids and mouths to feed. And I was like, this isn't it, right? I was burnt out. And I was feeling like I couldn't show up as my authentic life, my authentic self. And this just didn't feel anymore like the life that I wanted to live. And so in 2019, right, I actually kind of took some time to really figure out what I actually wanted to do. I decided I'm going to open my business, right? I had all this financial background. I knew how to manage my money. I knew how to invest. But up until that point, I wasn't really investing for income. I was investing for the future, like most people, right? I was investing for retirement. But I learned within that period about trading, and I learned that I can generate income right now through trading and investing. And that's something that I began to do in that period. And now, still outside of corporate America, thank God didn't have to go back to a job, right? After I dropped out of corporate America, started my business, I really had that flexibility to be able to live a more authentic, aligned life. So now I get to travel, I get to spend more time with my children. I'm not working like 60 hours a week any longer, get to show up for the parents' meeting, the shows, all the things, and be a more present parent in their life and have more fulfillment. And I realized I did not have to necessarily sacrifice income. So now I have income, I have impact, I have influence, and just wanting to be able to teach other professionals, other leaders that you can have a more authentic and prosperous life and you don't have to be tied to a paycheck all the time. So, like I said, the truth was freedom isn't found in a paycheck, it's found in fulfillment. And so, question for you is what does freedom look like for you? I know I asked this a little bit in the beginning, but what does that look like? A lot of time we're thinking about the life that we're supposed to live in terms of the job we're supposed to have. But what does freedom look like and feel like for you? Does it look like that you have more time, you have more flexibility, you're able to travel, you're able to start a business? Think about what that looks like for you and jot it down or drop it in the comments. Because investing is really a bridge between your current reality and that aligned future and vision for your life. It's not just a destination for when you retire in the future. You can use investing now to be able to close the gap between where you are and that vision of freedom that you desire to be. Can investing could bring you closer to that fulfillment, right? Not just growing your money for retirement, but creating a life that feels rich in every sense of the word, being able to create the experiences and the life that you want to have now, not just when you're 65 years old or 70, right? While you're young, while you still feel vibrant to do the things now. So this is a quote that I like, which is peace and fulfillment is the new flex, right? People think making money is the new flex or a new promotion or a job is the new flex. But what I realize is peace and fulfillment is actually the new flex. And your financial freedom starts when your inner world and your outer strategy finally matches, right? You want to be able to feel fulfilled and pleased and happy in the inside, not just on the outside, because that's what I had. I just had it on the outside. I looked like financial freedom on the outside, but on the inside, I was burnt out. I was stressed. I was unfulfilled. And now I feel it both inside and outside. So, what most people get wrong about investing is they hear things like, and let me know if you've heard this before, investing is risky, right? They think that investing is risky. They don't want to invest because they feel like they're going to lose their money. And it's only risky for those people who don't have a plan, who don't know what they're doing. They're just kind of throwing spaghetti at the wall and hoping something sticks. But if you have a plan, it's not risky. They hear that trading is gambling, right? You can't time the market. And what I realized, especially since I lost corporate America and I started trading and I started learning how to trade, that trading is a tool for alignment, right? Trading was a tool for me to be able to create streams of income now. But you definitely do have to have a strategy. And also, people say that you need a lot of money to start investing, right? I hear people like, well, I don't have a lot of money. How much money do I need? There's no minimum for you to open up a brokerage account and start investing or trading. Your investment account is not saying you have to start with $10,000 or $5,000 or $1,000. You could start with $100 if that's what you have. It's all based on what you're going to invest in. So not every investment obviously costs the same amount of money, but there's no minimum for you to get started. So I'm going to go over the 5-step framework that I use when I'm trading. So that's what I'm going to walk you through in this class. And so, just a little disclaimer, I am going to share some real investing information. We're going to look at some real stocks, look at some real companies, but this is for educational purposes only, is not advice. I'm not telling you to get into these companies or to get into these different stocks. My goal is just to empower you, to give you the confidence and the clarity that you need to get started. And it is not a recommendation for you to buy any of these particular stocks or securities. So, fun fact, right now, as of the end of 2024, the total stock market capitalization is $67.8 trillion. So, this is how much value for the companies that the total stock market has right now. $67.8 trillion market cap, right? That is a lot of money. And that has been an increase of 315% over the period of 2010 to January 2024. So if you think about that in the past 15 years, that means every year that the average is about 23% average return, ROI, right? So when you think about your bank, if you have your money in a savings account or checking account, they're giving you like 0.01%, right? And if you're lucky, and maybe you have like a high yield savings account, maybe you're getting 2% or 3% tops, right? If you're really lucky. But the stock market on average for the past 14 years have been getting a return or increase of about 22 to 23%. So that's better than anywhere you're going to put your money in. And that's just on average, right? Some people are getting more than that depending on what they're invested in. So that's better than any bank that you're going to put your money in, any CD, any of those things. And so I just want to show you an example of what that looks like in terms of saving versus investing. So I'm all about saving. You definitely need a savings account for emergencies, for opportunities, having your money somewhere very secure. I agree with that wholeheartedly, making sure that people have a savings account. but you can't only have a savings account. So I'm going to show you an example of what the difference in terms of account growth. So say you had $20,000 that you put into your savings account, and then you were redepositing every month like a reoccurring payment of $1,000, and you were getting a ROI, return on your investment, of 1%. After 10 years of investing $1,000, right, at 1%, you would have $202,000 in your account. However, if you took that same $20,000 initial deposit and a reoccurring amount of $1,000 a month, and you just put it, say, in the stock market in just like a regular index fund, which I'm going to go over what some of those things are. If you put it in like a regular S&P 500 index fund, your portfolio value after 10 years would be over $1.1 million. The same amount of money. You're not investing any additional money. You don't have any more money. You're doing the same exact thing, but you're putting it somewhere different. That is huge if you're talking about which amount will allow you to leave your job, right? Whether $202,000 allow you to leave your job, or whether $1.1 million will allow you to leave your job. So this is an example of the growth that you get in investing versus saving. So like I said, you should be doing both, not one or the other. You do need a savings account because stuff happens. So you do need that money for security, but you also have to be investing because there's just no way that you're going to have that kind of growth without investing. And so I'm going to talk about the difference between investing and trading, because I know I mentioned I was investing when I was in corporate America, and then when I left, I started trading. And these words sometimes are used interchangeably, but they're not the same thing. So when you're investing, investing is the art of allocating resources, which is usually your money, with the expectation of generating income or profit over time, right? A lot of people, when they're investing, like retirement accounts, it's for the long haul, right? When I retire, when I'm 65, sometime in the future, way over, right? But when you're trading, you're buying and selling securities, right, such as stocks, with the intention of outperforming a buy and hold strategy. So you're not in there for a long time. So you're in there because you're trying to make income and outperform the market now for like the present. And so I like to compare this to like dating versus marriage. So investing is like marriage. You're in this for a long time, right? You're going to be in this for 20 years or so. You're going to be in here till you're in rocking chairs, right? It's in here for a long time. Whereas trading is like dating. You're not in here for a long time. You're in here for a good time, right? You're in here kind of for the now. We tested things out. We're having a great time. We're having all the fun. And that's kind of, I would say, the difference between investing and trading. So investing long term, trading more current, short term. And there's some common mistakes that new investors get in, new traders get in, and they lack the knowledge of market timing. Because when you're trading, there is some information that you need to be able to understand in order to know what investments to get into. It's definitely more important when you're trading to understand these things. And also, some new investors, they lack risk management and position sizing, which means they don't know how much money they should put into something. They don't know how to manage their risk, which is why you hear about some traders losing money because they didn't know how to manage the risk before they got into an investment. Or they lack a trade plan, which I think is incredibly important, which I'm going to review with you today. You need to have a plan when you're getting in these trades. You're not just winging it. Is a blueprint, a system of what you're doing before you get into a trade. So imagine knowing exactly what trades to enter into, knowing what price you're going to buy this security or stock for, and what price you're going to sell it at so that you can have maximum profitability. And then also being able to take trades without being at a computer screen all day, right? Because nobody has time for that. We live in our life. So the steps that I'm going to show you is designed for you to be able to do these things so you can have peace of mind in your investing and trading process. So it's essentially a system, a trade system, because a trade system is a set of rules that tells the trader When and how to trade. So in many cases, traded systems are like a blueprint. We're not winging it. You're actually looking at your rules that say, I'm going to get in at this time. I'm going to get out at that. I'm going to sell at this. I'm going to do this as this happen, right? It's really a strategy. So I'm going to share with you the 5-step freedom. I'm calling it my freedom framework, which is 5 steps to confident, clear, and profitable investing. And so just an overview, I'm going to go into all 5 of these steps in details. But the first one is the market analysis, where you're observing the entire market without attachment, right? You're looking at how the entire market is doing, and then you start deep diving from there. The second step is you're going to look at your company research. So you're making data-driven stock selections based on the research and the criteria that you're looking at. Then the third step is trade analysis, which is the strategy guided by clarity and not emotion. So you're going to have a strategy. It's not going to be your emotions. It's not going to be like, I feel that this stock is going to do this, right? We're looking at our strategy and our plan that's telling us if this happens, then do that. We also have a strategy selection, which determines your potential price entry and exit points. That is the fourth step. And then the last step, last but not least, is trade management, which is protecting your profits, right? That's protecting your freedom, which is telling you how to manage this money, how to manage this trade so that you're in this for maximum profitability, because that's why we're trading, for profits. So step 1 is market analysis, is all about observing the market. So in the stock market, there are 4 indexes. So I'm not sure if y'all heard of these, but if you turn on any financial channel, CNBC, Market Watch, whatever it may be, you're going to hear people talking about the S&P 500, the Dow Jones, the Russell. You're going to hear about all of these names. So essentially, these are stock market indexes. And the S&P 500 is 500 of the world's largest companies. So we all know that the US have more than 500 companies, right? But the S&P is the largest US companies, and that's really determining how the whole economy is doing. So economists, financial analysis, they look at these 500 companies and they determine this is how the entire economy is doing based on these 500 companies. And that's what's in the S&P 500. Then you have the Dow Jones, which is the 30 largest American companies. So these are like your Walmart, these are like your Johnson and Johnson. These are your top 50 American-based corporations are in Dow Jones. And then you have your NASDAQ. And NASDAQ is 3,000 of the top tech giants. And then last but not least, you have Russell, which Russell is kind of like everything else, is your small cap companies, your large cap companies, everything, all the other companies that doesn't fall into one of those 3 is in the NASDAQ. So we start with looking at the total market to say, what is the total market doing? What is the S&P 500 doing? What is Dow Jones doing? What is the NASDAQ doing? What is the Russell doing? And then we dive deeper from there. And there are 11 market sectors. So the sectors is kind of like the classification of every company. So every company is going to fall into a sector, right? If you are say Tesla, right? If you are a car company, then you're going to fall into like an industrials energies. If you are a Walmart or a Target, you're going to fall into like consumer discretionary. If you are like a Walgreens, you're going to fall into like healthcare. If you are, say, what's another company, a Citigroup or a bank, a Wells Fargo or something, you're going to fall into financial. So every company is categorized into a market sector. So you also want to look at what market sectors are performing well, right? Because you could look at, okay, the total market may be up, but which sectors in this total market is driving the economy to be up? Or maybe which sectors are driving the economy to be down? So there's 11. There's energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication, utilities, and real estate. So every company is in one of these categories. So I start with looking at how these sectors are performing. So this particular screenshot is taken from Bloomberg, and Bloomberg is a free website that everyone can log on to. You don't need an account, you don't need a subscription, but it will break down how the sectors are performing. So this is just a screen print at the time that I took it that was analyzing each sector. So this is all the 11 sectors. So red means down, green means up. So you could see what sectors are up, what's performing well, and then you could see what sectors are down, what's not performing as well. And then on this right side, it's showing you how much they're up by. So in the green, it's showing you, okay, they're up by this percent. And in the red is showing you they're down by this percent. So you want to analyze what sectors are performing the best, what sectors are driving this. And once you determine what sectors are driving the market, then you could start to further deep dive even further. So for example, this says utilities. If you're like, okay, utility sectors are up, let me see what companies and utility is driving that. So then that's going to give you an idea of some things that you may want to invest in. So this next screen is taken from a site called Spider, but it's spdr.com, another free site. And you can now further deep dive into the companies of each sector. So if you were looking at, for this example, this is consumer discretionary. Now you could see every stock in consumer discretionary, and you could see how this company is performing. Because a lot of people like to say, well, I don't know what company to invest in. Well, if you open up the stock market and you see that, okay, consumer discretionaries is up, and then you click into the stocks and consumer discretionaries, now you're going to see a whole bunch of companies and how they're performing. Wouldn't you now have a list of companies that you could potentially invest in? So this is how I look at it as well. It will tell you a list of all the companies that's in that sector and how much they're up for that day, for that year, for that time period. And then you could deep dive even further and decide if this is a company that you want to invest in, that you want to get into. And the second step is company research. Because now that you see all these companies, right, you'll have a list of companies that will be potential investments. You're going to want to understand, well, should I get into this company? So you're going to want to do some company research and make data-driven stock selections, right, based on certain criteria, not based on your feelings. And so for this example, I selected Marathon Oil Company. So I brought this stock up on Yahoo Finance, which is another free 99 site, right? You don't have to pay anything to go into these sites. So then I started looking at the company. And at the time that I pulled this, the stock price of this was 31.68. So remember when I'm like, you don't need a minimum in order to start investing? It just depends on how much the stock or the asset that you're investing in costs. It doesn't depend on how much money is a minimum. It just depends on how much you can afford. So there's certain key metrics that you need to look at when deciding when to invest in a particular company. So some things that I look at is obviously stock price, right? That's important because you want to know if you could afford it. Just like if you're in a supermarket and you pick up a product, or you're in a store and you pick up a product, you're going to look at the price. You're going to say, can I afford this? So you're going to do the same thing for a stock. You're going to look at the stock price. Also, something that I look at is volume. I want to know how many people are buying into this asset. That's really important to me because you don't want to get into a company that other people aren't buying into. You want to get into a company that's hot. So I need at least 1 million other people to be buying into this on a daily basis, right? We have billions of people in this world, right? We need to make sure that this stock is actually being bought and sold on a regular basis. So we're looking at volume. Because if you were looking at a company and the volume was like 100, 200, 300, a lot of people aren't buying into this company. So if a lot of people don't want it, I don't want it either. I don't want to be the only one optimistic about this company? I'm like, no, because people aren't the only one buying stocks. Institutions are buying stocks, right? Your jobs is buying stocks for the employees. There's a whole bunch of companies buying stocks. So the volume should be high when you're looking at a company. So I'm looking at volume, I'm looking at average volume because that's going to determine if the value I'm seeing for today is higher than average. Because I might be looking at a company in the volume, say, for example, just recently, one of those meme stocks, Beyond Meat, they had one of those huge spikes. So when I was looking at the volume, it was like 20 million. No, actually, I think it was more than that. I feel like it was like, it might have been like closer to like 50 million people had got into that stock for the day, but the average volume was usually like 1 million. So then you see like something's happening, right? This is a spike. What's going on here? So these are things that you want to look for. Also, market cap. So, market capitalization is how big a company is. Remember when I said the total stock market capitalization went up over 314%? It's like over 30 trillion right now. You want to look at a company's capitalization. So, you want companies that are worth millions, billions of dollars, right? So, when this example of Marathon, the market cap is $22 billion. That's a big company. You want to be invested in strong, stable companies. You don't want a company that's just worth $1 million, right? You know, entrepreneurs that's worth $1 million. You don't want to be invested in a company that's only worth $1 million. You want to make sure that this company is big, that is secure, that is stable. There's also ratios like PE ratio, earnings per share, dividends. So these are a lot of the different metrics that I also teach in my coaching programs that we're looking at when we're deep diving into a company to make sure this is actually a good investment to get into. And then we're going to do some trade analysis, which is the strategy that I teach clients, which allows them to have clarity when they're investing and not emotion, right? Because sometimes we get into our feelings with a trade and we just want to get into this because somebody said something about it. And we're not doing FOMO, right? The fear of missing out. We're not just jumping into trades because of FOMO. We want to be strategic. So something that I also teach is to be able to recognize trend and chart patterns. So in this particular example, with these red and green marks on the screen that looks like Christmas trees, these are called candlesticks. So candlesticks is something that we use with trading and it's called technical analysis. So it gets a little more technical here, but it's something that I use to teach people to understand, okay, should you get into this company? So you want to make sure that the company is growing. The stock prices are increasing. There's an uptrend. So there could either be an uptrend, a downtrend, or sideways. So uptrend meaning basically it's going up, right? The stock price is increasing. Downtrend, reverse. The stock price is decreasing, or sideways, which means it's pretty much steady. So we look at how the stock prices are performing. And then there are patterns. So sometimes there are actually patterns that happen that you could spot. There's different continuation patterns or reversal patterns. There's actually things that happen with the prices that could allow you to predict what's going to happen next. You're like, okay, so if this drops to this price, then more than likely it's going to bounce to this price. So there's different things that you can look at that you want to pay attention to when you're looking at the candlesticks, to recognize patterns, to recognize trends. That's going to help you determine, is this a good company that you should be investing in, right? And it's not just based on how you feel about the company. It's based on what are the patterns telling you? What are the trends telling you? What is the price movement telling you? And if you have any questions about that, feel free to drop it in the chat. I'll definitely be answering questions. And so the fourth step is strategy selection. So you want to determine what's the potential price points that you're going to enter and exit a trade so that you could take your maximum profits. So there's three important elements to a trade. Your entry point, which is your first step, right? This is the price point wherein you're going to enter into a trade. Also, your target point. So your target is how high do you think this trade is going to go for you to get the profit that you desire, right? Because if you're getting into a trade, you're getting into that trade because you're trying to make money. You're trying to make a profit. So how much are you trying to make? How high do you think that the price of this particular trade is going to go to? And then your exit point, because your exit is how you make money. You have to sell a stock in order to make money, in order to realize that money. Because if you don't sell it, then you actually didn't take a profit. You have, it's almost like unrealized profit. You have to actually sell it. So it's like a painting. If someone gave you a painting worth $10,000, while you're holding on to that painting, you don't have the money. You have a painting worth $10,000, but you have to sell it in order to get the $10,000. So same for the stock. You have to sell it to actually realize your profit. So you want to know, at what point are you going to exit this trade? What price are you willing to sell it at? So you need to know all three of these things before you actually enter. I like to tell people, start your trade with the end in mind. Know when you want to get in, know how high you think is going to go, how much money that you're trying to take, and know when you're going to get out, right? Whether you're going to get out at the maximum profit or you're going to get out before that. So you need to know all of these before you actually enter in terms of trading. And so I teach clients how to identify these three elements, which I call them your support and resistance points. So it's more like a technical term, but it's really your buy zone and your sell zone. So we start identifying on the charts. I know it looks a little technical right now, but I promise I walk this through simply. And you get to identify, okay, this is a point where you want to buy. So if it gets anywhere in this area, if it gets anywhere around this price, this is really a good point for you to buy, right? This is a demand zone. This stock is in demand. You want to get it. You want to buy it at this price. And then you want to identify your supply zone where you want to sell it. So when the stock gets to this price, this is a good price for you to sell it and take your profit. And so we identify this on every trade before you actually take it. So you have, when people are saying like trading is risky, to me, trading is risky if people have no idea when they're entering or exiting a trade and they're just getting in because people are telling them to get in. So to me, that's risky, not having a plan. But if you have a plan, you know you're going to buy it around this price, at or around this price. You're going to sell it at or around this price. This is how much profit you plan on taking. Then to me, that's not risky. You have a plan. Does it always go according to that plan? Not 100% of the time, right? Because you can't predict exactly if the stock price is going to go there, but you do have a plan. You're like, okay, it's going to go here, or I anticipate it's going to go here. If it doesn't, I will do X. If it does, I will do Y, right? So it's not about how you feel. It's not like, maybe I'll sell today if I woke up in a good mood. Maybe I'll buy today. It's like, no, what does your plan tell you to do? Right? So you want to make sure that you have a plan. And this also allows you to not have to be at a monitor and a computer all day, because there are different things that you can put into your account where this is done automatically. You don't even have to sit there and look at it. It's done for you. And the final step, last but not least, is trade management. So this is how you protect your plan and protect your profit and protect your money, because you don't want to lose what you're gaining. You don't want to lose the money that you're putting in. So you have to have a plan to manage that. So this is a risk management plan. You want to be able to keep your risk low, but your reward and the profitability of profiting high, right? There's always going to be some risk in investing. You can't eliminate risk. If you put money into any investment, right? Whether you're putting it into a cryptocurrency, whether you're putting it into real estate, whether you're even putting it into a business, there is some level of risk involved. But you want to keep the potential of reward way bigger than your probability of risk. So you want to have certain order types that you put into your account that's going to protect your money. Because the stock market can go up, the stock market can go down, right? We know that the stock market don't only go up. There's moments that prices drop, that it goes down as well. But you want to be able to mitigate and manage your risk with certain order types so you have more of a higher probability to take a profit, and you can cut your losses quickly if you are going to be at a loss or you see that you may be at a loss. So there are different order types, which is essentially instructions to your brokerage account on how to execute a trade. So this tells your brokerage account what they should do when it gets to a certain price. So there's a market order. And a market order means to simply buy or sell at whatever the market price is. So whatever the price is going for at that moment, buy or sell at this price. So if you buy an order, you sell an order, and you select market order, these are just different order types in a brokerage account, is going to buy or sell it at whatever price it is at that very moment. And is the fastest way to get it in and out of a trade. But there's also something called a limit order. And a limit order is specifies a certain price at which you want to buy or sell something at. So you could be looking at a stock, and the stock could be, let's say, $52. But you think that you can get it at $51. Or shall I say, you think it's going to go down and you rather buy it at $51. You could put a limit in there to say, if this stock goes to $51, then purchase it for me. And you could do that on the reverse side, right? If you are trying to sell a stock or you're trying to protect your profit, you could say, if this stock gets to this price, sell it. So these are different order types that you could put in automatically. So you don't have to be at your computer. You don't have to be at your phone. It just happens automatically. There's also something called a stop order. And a stop order, it triggers when a stop price move below or above a certain price. And it also will sell off for you. So if you're in a stock and you bought it at 50, you want to sell it at 60 because you want to get that $10 difference of profit, right? Depending on how many shares you have would determine how much profit you have. You could say, when it gets from 50 to 60, sell it, stop. I want to get out of it. Or it could be lower. You could say, okay, it's $50, but if it drops to $49 and I start losing money, I want to get out of it. So you could put a stop order to say, if it gets to 49, get me out of the stock. So it's different order types. And there's the stop limit order. There's trailing stop order. So these are other order sets where you could put in maximum or minimums that you're willing to sell or buy off of security, and it will activate to your brokerage account when you want to buy or sell at a specific price, which is, I know it sounds like a lot to remember right now, but these are all things that I also teach how to do in my coaching class. And another advanced strategy, which I teach and I think is a game changer in terms of accelerating your account growth or your profit, is options. And I'm not sure, have you heard about options? I know there's a lot of people out there who talks about them, but options is definitely a way to accelerate account growth as a trader, where you could really get some really high return on investments. I'm talking about triple digit return on investments, right? We were talking about in the beginning, average stock market, 22% returns. But there are people trading options, myself included, who are getting 3-digit returns on their investments. So I definitely recommend options in terms of trying to accelerate account growth. So what are options? So stock options are contracts for the right to sell or buy a certain amount of assets, right? In this case, it could be a stock at a given price, which is known as the strike price. And these contracts are valid up into a certain expiration date. So you kind of could think of it like you're leasing a stock. You're not actually, when you have an option, you didn't actually buy a stock. So when you bought a stock, now you're in that security, you own that security, you're a shareholder, you have equity in that company. But when you buy options, you actually don't own the stock. It's like, for example, you know someone, think of almost like an Airbnb. say you're at your sister's house and she's out of town, but you're like house sitting. And you're like, you know what? I could actually rent out her bedroom as an Airbnb and I can make money on this Airbnb while I'm staying here and my sister is wherever she is. And so you rent one of her rooms and somebody pays you for that, right? They pay you money to rent the room and you just get paid. But that isn't your house, right? You don't own that house. That's somebody else's house, but you made money because you had control over that house at that time. And that's kind of how options work. You don't own the stock. You never had to buy the stock, but you have control over the stock and whatever happens over that particular period of time, which is called expiration date. So you can hold on to the stock for a week. You can hold on to a stock for a month. You can even hold on to a stock for a year, but you don't own it. But whatever's happening in that period of time, if the stock goes up, if you're anticipating it to be a big increase, you will make the money, even though you don't own the stock. And you didn't have to pay as much for the stock because you don't own the stock. So it's definitely a strategy that I teach that I think is really great for account acceleration. So let me give you an example of how that works. So stock options give you control over 100 shares. So if you were to buy a stock right now, in this example, Microsoft. So at the time I took this screen print, Microsoft was at $271 per share. So if you want to buy Microsoft, you got to have at least $271 in order to get stock in this company. But if you were to buy an option contract of Microsoft, you can buy it at a fraction of the cost. So in this other screen, you're seeing that it says like 191. The screen print is a little small, but it's giving you different prices. So you have to times that by 100 because one contract equals 100 shares. So it's saying that you can get into a contract for $100 and something and you have 100 shares. If you bought 100 shares of Microsoft at this current price, you would have to spend $27,000 to get 100 shares of Microsoft. But if you got into a contract of Microsoft, you would have spent a couple $100. Isn't that much better? You have the same control over in terms of if Microsoft price goes up, you make the same amount of money, but you actually don't own the stock. So if nothing happens at that time, that money that you put out, it's almost like, not to say you lost it, but if you don't make a profit, that's the most that you could lose, that 100 and something dollars that you put in. So you can't lose any more than what you put in investing. That's how it goes. You can't lose more than you invested. But if the stock price of Microsoft didn't go up, then at most you'll lose that amount of money that you put in. But if it did go up, then you would get all of that profit in terms of if it went up $5, $10, you would have gotten all that profit. So if it went up like it would go up $1,000, but if it went up $10, then you would have gotten like $1,000 profit from Microsoft. And what if that happened in a week? Then you would have gotten that profit in a week. And so I think options are so powerful because it allows you to get the profit of having a stock and having it like if you had 100 shares, but you don't actually own it. So after the contract is up, you're out of it. Just like if you were house sitting for your sister, when she come back home, you got to get out, right? That's not your house. You got to keep that money, but you still got to get out because it's not your house. So it's kind of the same for the option. Like you have to get out because that's not your stock. So you were only borrowing it for that period of time. But it's definitely a powerful strategy that I teach, and I think is a huge game changer. But when you are a buyer, you could be a buyer or seller of options. So you could sell options. So say, for example, you actually had 100 shares of any company. You can sell options, right? It's almost like you're renting out your house because you own it. But you can also be a buyer of options if you don't have the stock. So option buyers have the right to buy or sell a specific asset or stock on or before a specific date, right? Which is called the expiration date. And option sellers have the obligation to buy or sell a specific asset or stock on or before a specified date. So you choose the date, right? The date is always on a Friday, but you choose how long you want to hold onto a position. It is your choice. And so some benefits of options trading is You can start with a smaller investment. So, like I said, the options cost less than if you were actually going to get into the actual stock or asset. You have unlimited profit potential, right? Unlimited. That stock price could go up to the roof. It could go, as they say, to the moon. There's no cap onto how high a stock price can go, which means there's no cap on how much money you can make on an option. And your risk is limited in terms of the most you can lose was the price that you paid for the option. That's the very most you could lose. Obviously, option prices vary. You could spend $1,000 for an option. You could spend $2,000 for an option. So that would be at most the most you can lose, but your profit potential is unlimited. You can make money if the stock market move in any direction. So there are strategies that you can make money if the stock price is going down. So there's different options that you can get, which I go into more in coaching, but it's call options, it's put options. So depending on the way a stock is moving, you can make money when it goes up, you can make money when it goes down, which is powerful. Because if you have a stock, you don't make money on your stock when the stock price is going down. You don't make money, right? You lose money. But in options, you can actually make money when the stock price is going down, which is super powerful. And options are great for generating daily, weekly, or monthly income. Because, like I said, you can have an option for a week, you can have an option for a month, you can have an option for a year if you wanted to, in terms of expiration date, how long you want to hold on to it. And it's low risk because you could put in those order types, how I told you, stop order, limit orders. You can put that on options. It's not just for stocks. So you can limit the amount of loss that you can get in an option. And it's a higher rate of return from traditional buy and hold strategies because it allows you to have 100 shares of any particular stock at a time. So it gives you a lot more earning power in a small amount of time than if you were to just buy a particular company. So, like I said, for that example for Microsoft, it was like $271, I believe. If you would have bought 100 shares of Microsoft, that's $27,000. Not everyone maybe wants to put $27,000 into one company. But if you bought the option, it gives you control of 100 shares without spending $27,000. So that gives you the potential for a much higher rate of return than most people would have. So definitely great benefits for options. But you need a framework, right? You need to have a framework for trading options. You need to be able to know how to choose correct expiration dates because you can hold on to them, like I said, from a week, a month, a year. You need to know how to pick these dates. You need to be able to know how to select a correct strike price. So, strike price is a price that you're willing to sell it at. You need to be able to assess volatility of a stock, right? That means what's the likelihood for it to go up and down? Because your option is contingent on how the actual price of the stock that you're borrowing is moving. You need to understand time decay. That's a factor in terms of when your option is running out, like you're closer to the expiration date, the date that you're holding it on to, if the stock didn't do what it was supposed to do, now is more likely you're going to lose that money, right? If you had an option for a month, you thought the stock price was going to go up $10 and you got a week left and it didn't go up $10, obviously the probability to losing what you paid on that option is higher because it didn't do what you thought it was going to do. So you need to understand that. Position sizing, risk management, these are all things that you do need to understand when you're trading options, which is something I dive deeper into, more one-on-one coaching. But I know I showed you a lot, right? It was like a mouthful. I try to cram in a lot of investing and trading talk in an hour period of time. But I hope that I've showed you exactly how you can use my system to achieve your investing and financial goals. So just recapping a few things that we've learned. We've learned investing versus trading, right? Because like I said, it's two different things, investing versus trading. So you learn what's the difference between if you were an investor long-term versus a short-term trader. Hold on. You also learned my 5-step framework which is teaching you the 5 steps that I use to enter and exit a trade while managing your risk. You've learned how you can accelerate your portfolio growth through options trading, which I said I think is a game changer, being able to trade options. And so let me ask you, given our short time together, like I said, I try to cram in a lot of information in a short time. Did you learn some valuable information here today? Definitely let me know. And I really want to try to understand that you don't have to hustle harder to be free. You don't have to hustle harder to have more money. You really just need a system that helps your money work for you, that helps your money to accumulate faster. It's not about just working harder, right? A lot of people don't even have to work harder to make more money, right? They work smarter, they work at a higher level. But it's not about working harder. It's about having the right system and the right strategy. So now you have like 3 options that you could take, right? You could stay the same at what you're doing, right? And just take the information, but do nothing with it. You could say, okay, that's cool. That's great information, but I still don't get it. I'm not ready to take action. And that's it. Or you could try to do something, right? You could say, okay, I took great notes. I'm going to try to implement this. I'm going to go on some of these sites. I'm going to see what I could do, and you do it on your own, all alone, right? That was some people when I first started, I was kind of doing it alone before I got some support. Or you can do the third, which I think is the best option. You could bust the move, but you can get some help in the process. You could get someone that can help walk you through, that you can ask questions, that you can get some support. And so if you are number 3, that is why I created my Trade to Profit Accelerator program, which is an investment accelerator program to help you trade and unlock the freedom so that you can design the life that you want to live. So it's teaching you all of these things that I was teaching you today, but not as condensed as today, right? Walk you through all of those steps, how to enter a trade, how to exit a trade, how to do options, but you're able to do it with me, hand holding you at your own pace, able to ask questions, and that I'm able to break it down for you and not such a accelerated session. So just showing you what are some of the things that are covered inside the Trade to Profit. So the first one is really about your goal setting and creating the goals and the mindset that you're trying to achieve, right? Because, like I said, this isn't just to make more money, it's really to create options for you for the life that you're actually trying to live. It's not making money for the sake of making money because I was there, right? I was making money for the sake of making money, but I was still unfulfilled. So, what are your goals? So, when I asked you in the beginning, what does freedom look like for you? What is it that you're actually trying to achieve? And how much do you need to actually achieve those goals? It could be, I want to be able to vacation once or twice a year internationally. Well, how much more do you need to do that? You want to be able to get a cook, a chef, whatever it is. How much more do you need to be able to do that? You want to be able to get a housekeeper. So just being able to create these goals for you so you know what, like, why you're doing this and how much money you need to make. Then the second module, we get into the fundamental analysis stuff. So that's when we're going into the markets, understanding how do we do that top-down approach, right? How do we look at the total market, the different indexes, S&P, Dow 5, Dow Jones? How do we look at these indexes and figure out, okay, this is how this is doing. These are how these market sectors are doing. This is how I pick this company. What am I looking into? How do I determine what to buy, right? That's what we'll be breaking down in the second module. Also, the technical analysis of learning when to buy, right? When is those demand and supply zones? When do I buy into this? When do I sell this? What are those different chart patterns that I'm looking for? How do I read these candlesticks that's on the screen, right? These Christmas lights. So really deep diving into that. So you know exactly when to get into something and you're not doing this based on how you feel or based on emotion. You really actually have a plan that's saying this is when you enter, this is when you exit, this is how much profit that you can make off of this. And then you learn how to create a trade plan and a strategy with risk management. So when I was saying those stop orders, those market orders, those trailing stop loss orders, this is how you know, okay, here's the plan. This is when I'm going to get out. This is where I'll get my profit. If it's not going to plan, right? If the stock price is going down, if you feel like you're in jeopardy of losing your money, this is when you exit, right? This is when you get off because you are not going to lose more than you put in. It's impossible, right? You can't lose more than you put into an investment, but you don't have to lose all that you put in, right? If you're putting in $1,000 and you lost 100 of it, you might be like, I'm not trying to lose all 1,000. So I'm gonna get out at this price if I lose 100 of it, right? You don't have to lose all of it in order to get out, but at most you can lose is what you put in. Also, the module 5 is when we start talking about the option trading, right? So when we start getting into option trading, we start getting into how to really place those orders, how to look at those contracts, what are some good option contracts that you can get into to accelerate your return. So that's when we start getting into that. We can't go into options until you know the other stuff though, right? Because I want to make sure you understand how to pick the right companies because you can't be picking the wrong companies and trading options. So you got to understand how to pick the right companies, what price to get in, what are you looking for to happen? What's the trend of this company? How do you create a plan? So I want to make sure that, you know, all my students know that before they get into options trading because we're not guessing it, right? We're not, as they say, when people say that trading is risky or trading is gambling, it's not gambling because we don't have a plan. So I'm gonna make sure that students know how to have that plan before they even get into options trading. And then the last module is all about trade and portfolio management. So it's all about really teaching you how to be a more confident investor, how to be able to trade more strategically. And you can do this in your retirement accounts. The only difference about doing this in your retirement accounts is you can't take that money out until like your what is the age? I think 65 and a half. You can't take it out until you're 65 and a half. So unless you only want to do this to accelerate your retirement account, which you can, right? Like all this extra money that you're making would just go into your retirement account. You would need to open up like a brokerage account if you want to be able to take the money out in real time. But these strategies could apply to a retirement account or to a brokerage account that you're using for the present. And so once again, just trade to freedom accelerator and the price of it, right? Everyone's like, well, how much is this going to run me? So the trade to profit accelerator is $9.97 for all of those things that I said. So for all of the modules, you get live monthly coaching with me. So if you have a question that you want to talk to as you're going through the modules, you're like, okay, I need further clarification or I didn't understand this. You also get a ton of workbooks, trading templates, checklists. So if you're like, okay, let me look at this. She said, do this before you do this. So you have all of that. You also get a private community. So it's in a portal that has a community that has access to me. It's not Facebook, it's actually in the program portal. And then you get lifetime access to the curriculum. So you could rewatch it as often as you want to, go back in as often as you want to, stop, pause, rewind, all the things. And as a bonus, I've added in there my personal watch list. So these are stocks, companies that I'm invested in, so that I did the research on. You have a budget like a boss boot camp because you got to know how to manage your money, right? Even if you're making more money, you still got to know how to manage your money. So I threw that in there and an investing strategies for a beginner's class. So that goes into more of like, what is the stock market and what are the indexes and what's an ETF and what's an index fund and what's an exchange traded fund and all those kind of like stocky investing jargon. I have that in a beginner level class because once you get into the trade to profit, we kind of diving right into like, let me get you to understand this, how to make money. So that's really perfect for people who want to have the clarity, who want to have the confidence, who want to be able to learn in a short period of time. But then I also have a VIP access version, which is everything that's in the accelerator, but more access to me, right? So if you're like, but I want to be able to ask you more questions, I want to be able to talk to you more often, I want to be able to call or text you when I'm like, should I get into this trade or not? So you get 3 one-on-one hour-long coaching sessions with me. Definitely need to book it within like the first 3 months so I can make sure you're getting started and you're doing it. You also get access to me on Telegram and email. So you could send me a voice note. I love to send people voice notes. So it's just really quick to get access to me. I respond back to you. We also create a personalized trading and profit review plan together that's personalized to you and your goals, right? It's all about, to me, goals. What are you trying to accomplish, right? Everybody goal isn't the same thing. Some people like, well, I want to make $1,000 extra a month. Some people are like, I want to make 5,000 extra a month. So everyone's goal is not the same, which is why I think it's important to understand what your goals are. And so the VIP version is $2,497, and you get more access to me, right? So I can help you walk it through. And I'm just going to give you like a few testimonials from some students, real people that started without any investing background at all. They started with just zero, and they were able to learn through the program. So one of them is Miss Mad. She said that she started with her Robinhood account at $1,000 on the first day of the program. Because like I said, you have to have a brokerage account, right? That's how you're going to be invested. So you got to open up your account because I want to make sure you're investing. And she began investing afraid with no experience. And she was able to learn the skills needed through all the coaching sessions. And she gave me a screen print of her Robinhood investing account, which was $17,000, which less than 3 months of zero investing trading experience. So she was starting from just a retirement account, opened up a side account, and was able, through option trading, to accelerate her account growth. Also, Chris, when I had spoke to him, he was saying that he was just ready to go to a financial advisor, financial planner in order to manage his money. And I'm like, you really don't need to do that. No shade to financial advisors or planners, but the things that I'm teaching, you can manage your money better than they can manage your money with the right skills. So he was intimidated as well. He started from a very small account, and he was able to make under 10K in his account before the class was up. And he was like, he's on plan. He want to make 100K in his account. But he was able to learn all the skills to grow his account from not knowing anything before the class. And then Kerwin, he was also someone, had a retirement account, right? He was just only investing in his retirement account. So he was saying he was a complete novice, didn't have any exposure to investing. But he was like, the class really taught him how to make measured and calculated risks to predict the market outcome. And the class taught him how to put the guardrails in place to protect his trades, to get more experience with the strategies and technologies. And Kerwin uses a lot of these strategies just in his retirement account, because I told you, it doesn't have to be you're doing it for profit now. You can use these same strategies in your retirement account. So I've showed you what's possible, right? You've seen what's possible. Now you have to be able to imagine what your success story is going to be so you could be a confident, profitable, peaceful, and aligned, because that is the point, right? So imagine you wake up knowing that your money is growing for you. You're making aligned financial decisions. You feel confident, you feel peaceful, you feel free. And that's exactly what Trade to Profit is here to help you build. And like I said, there's bonuses, the investing strategies for beginner class. There's a copy of my personal watch list. And then there's the Budget Like a Boss Masterclass. And so my promise is you'll leave this program feeling empowered, equipped, and in alignment with your financial goals, because wealth without peace isn't true prosperity. Remember, I told you, like, you can have the money, but if you're not feeling peace, if you're not feeling fulfilled, if you're not feeling aligned, then the money isn't going to give what it's supposed to give. So you don't have to chase money when your money is working for you. So again, this is all that you're getting in the Trade to Profit. I'm actually going to drop the link in the chat. So there are 2 options. Like I said, the VIP option and also the Accelerator option. So, Courtney, I'm seeing your comment that you work in finance and it's draining you. I overstand because it was draining me too. I was doing it for 15 years. So I'm dropping the VIP version in addition to the one-on-one. And if you have any questions, definitely drop it in the chat. I'm still looking at the chat. I'm trying to look at it and share my screen at the same time. So once again, the accelerator, it comes with the modules. So learning everything, these 5 steps that I told you, but I walked through them really fast because I was trying to get it done in an hour. But obviously, I do it much slower, right? So I'm not trying to get all 6 steps in one go. I'm teaching everything kind of one by one to make sure that you understand it, that you get it. So the modules are self-paced, so you can do it at your own leisure. And then if you have any questions, then you would ask those during the monthly office hours when I give you real examples, right? So if you're like, I'm looking at, let's say, I don't know if anybody's still going to Target, right? But say I'm looking at Target and I was thinking about getting in at this price. I was thinking about selling at this price. What are your thoughts, right? So I'm able to actually help you in real time with your questions. And if you need more access to that, that's why the VIP experience is even better because you get more access to one-on-one time with me. And if you don't need a whole hour, that's why the Telegram is great because you could just send me a voice memo, or you could send me a message, or you could send me an email, and then I can respond to you. But even for the accelerator program, it does come with the online community. So if you just want to send me a note in the online community, drop a message, you're able to do that there as well. And I would respond to you. But obviously, I respond a lot faster. It is through Telegram and through VIP clients that I could respond more real time when you have a question. So definitely let me know if you have any questions. I'm definitely here to answer them. But I appreciate your time. I appreciate you hopping on. Let me see if there's any more questions in the chat. Okay, so if no one has any more questions, I'm stop sharing my screen. And thank you all. I appreciate you.